Hello traders, I'm Luke from Disciplined Trader, and today I want to run you through a video that I thought was a perfect beginner trader experience to analyze and give feedback on to possibly help others that are either looking at starting trading or are maybe in the midst of beginning their trading journey as it stands. The video is by a guy called Daniel Inskeep. Daniel is a successful YouTuber. He has a couple of channels, one talking about personal finance, I think another one talking about photography. All his videos are produced to a very high standard. His videos are actually really good. I definitely recommend that you check his channel out. But this video in particular is talking about his first experience trading futures on a leveraged trading account. So this goes through basically his first couple of weeks, and he's very honest in his thought processes and actions throughout that first couple of weeks. It's worth mentioning that he's not a complete newcomer to investing. I think he has had some success on the stock markets. I think I've seen a video of his talking about the GameStop price squeeze, and he seemed to do quite well from the trades that he took on that. So he's not brand new to investing, but futures day trading this video is his first time doing that. I also want to caveat this video by saying that this isn't me sort of attacking Daniel or trying to dump on his experience of trading futures for the first time. The reason the video resonated with me was because, like I say, he was so honest in his approach and his delivery of his actions and his thoughts throughout this process that as you're watching through it, me now having been doing this for approximately a decade and thinking back to myself when I was a beginner, I think so many beginners have had this exact experience or will have this experience if they don't get any help in advance. So I thought it's a good thing to go over and sort of critique almost and give pointers whereby people, if this applies to people, they know where to go next or how to improve if they're making the same mistakes. So that is the plan for the video. I'm not going to play the whole video to you, but I will link the original video in the description below if you want to check it out. I fully recommend that you give the video a watch. If you want to watch it before this video, even better, because it will give you the full context of the video. I'll do my best to sort of give you the context as we move through the video, but I'm not going to recreate and re-explain everything that he explains in the video. So I'll let you know which bits you'll need to know about if you don't have that knowledge already. His aim is to start with a $1,000 trading account and essentially trade that all the way to $5,000 by day trading the futures market. He explains right from the off that he has no experience of this and that this is an experiment to see whether he can do it and ultimately whether others can do it. He then goes on to explain what futures are, why he's trading them, and what his plan is for the entire video. And rather than simply recreating, like I said, what he's already explained, I'd recommend at least watching, say, I think it's the first 5 or 7 minutes of the video where he explains essentially what those things are and how they work. So if you're new to futures or you don't quite understand all the ins and outs of them, I'd recommend just watching at least the first 5 or 7 minutes of that video. He does a great job of explaining how those markets work. And once he's done this, we get to see his first day trading.
So today was my first day trading futures on Tradivate. I traded very sloppily today without much structure or discipline, and it took me a while to get my settings right and just kind of get used to operating on.
One thing I would say right off the bat is getting to know your trading platform right from the off is super important. If you don't know how to enter a trade, exit a trade, manage a trade, the basic things, analyze markets, change markets. If you don't know where all these different bits and pieces of information are within a trading platform, then do not start trading with live money before you know this information. Demo accounts exist pretty much with every broker and on every trading platform that I know of. Open a demo account, get used to how the trading platform works if you're new to it. If you're still struggling, there are plenty of free material out on the internet that can guide you on how to use it. I have a comprehensive tutorial for MetaTrader 4 and TradingView if you use these trading platforms. And I'm sure there are plenty of others for the other ones, the ones that are used by more American traders like Robinhood, and I think he uses TRADINGVIEW in here. There'll be free material. Please spend some time learning how to use the trading platform.
I started with micro NASDAQ lots, which is MNQ. My first trade was 11 minutes after the market opened, selling 2 contracts. I didn't have my brackets set up correctly, so it actually closed out of the trade 1 second later for a profit of $2. Real quick, I forgot to mention if you want to see my profit and loss throughout the day, just look in the bottom left-hand corner of the screen recording and it'll show you. I tried again with another 2 contracts and it closed out 4 seconds later for a profit of $12. Accidental profit.
So initially he's having some trouble using the trading platform. Essentially he's got his stop loss and take profits set automatically when he opens a trade, I think, and the price is moving so quick that it's getting to those levels quite quickly, just because they're too close to the original entry. So he initially makes $2 and then $12 on the next trade, which equates to a 0.2% and a 1.2% return, which to me seems reasonable. You know, the profits from a $1,000 trading account seem reasonable to me. So that.
Then I actually decided to step away from the micros and went straight to the minis, which remember are 10 times the value. There was a good amount of volatility today, which made it pretty easy to get in and out with some quick scalp plays. Watch this trade here with the NASDAQ futures in real time so you can see how quickly my trade changes value. Just look to the left of the join bid button to see the value of my open trade. So I made just over $120 in 20 seconds. It's certainly quite the adrenaline rush to see those big numbers move so fast.
So his first proper trade, once he's got himself sorted with using the trading platform, he makes $120 in under 20 seconds, I think he says, but it did go up to $200. So this has happened because he's changed essentially the type of contracts that he's using. He's gone from micro contracts, which is 0.01 of a full contract, to a mini contract, which is essentially 0.1 of a full contract. And essentially what that's done is magnify his profits or losses by a factor of 10. So on the first couple of trades we saw him making $2 and $12, he's now making $120, but we saw that his profit goes up to $200. My first big concern here is that when you're trading with $1,000 and you're making 12% on one trade in 20 seconds, it's a big red flag for being over leveraged, but we'll continue.
And it's fun when you're profitable, but when you start seeing red, then it becomes a lot harder to stay disciplined. Now near the end of the New York session, I made some trades that I definitely shouldn't have. This shows both my lack of experience and discipline, and as a result, I gave back some of my gains. Luckily, right before the end of the New York session, I made a few quick moves to regain some of my losses. I ended up finishing today with a gross profit of $664.
So this is interesting, and pay attention to the terminology that he uses, but he essentially says that he goes on to make some bad trades, some trades that he shouldn't have done, and as a result of those bad trades, he makes losses. But then towards the later part of the day, he makes some quick moves and is able to recover some of those losses, finishing on, I think, after commissions, $549 profit. Now, what stands out to me in the terminology that he used is how he interprets good and bad trades. A good trade to Daniel seems to be one that makes money, and a bad trade seems to be one that loses money. And I don't think this is an uncommon conception of trades or perception of trades amongst a lot of people that are new to trading. Intuitively it makes sense. But for me, it's not the right opinion to have on trades, and I'll come back to it later in the video because there are more examples of this and it can be better portrayed later in the video.
But since I overtraded, I paid about $114 in commissions, resulting in a final net profit of $549.96. My average trade time was just 53 seconds, so you can see how quickly small moves makes a big difference.
So he says his average trade time is 53 seconds, which means, and I'm sure you've already guessed, he's scalping on the futures, which essentially means very short-term trades, entering and exiting the market in a very short amount of time. And with an average trade time of 53 seconds, he's definitely scalping. Now, Daniel's a beginner, as he's already mentioned, and we're already getting suggestions that he's over-leveraged. Scalping is really difficult. Even for someone that's really experienced, scalping makes everything more difficult. This is because your time to make decisions, plan trades, and react to what happens is just compressed into these tiny time periods. 53 seconds to decide to enter and then exit, and any sort of management that's gone in between there. It's really difficult. It's a skill that needs to be built up over time and a lot of practice, particularly with low risk, not with the risk that we're dealing with at the minute that Daniel's using. So my advice here would be that for anybody who is brand new to trading or trading markets like futures, please don't start by scalping. And if you do, please keep the risk really low. If not, keep to a demo account until you at least have built up some experience, a strategy, some discipline, know what you're doing. But we'll continue.
I had $1,668 in profitable plays, but I had $1,004 in losing trades. So if I can develop more of a strategy and stay disciplined, I think futures may become one of my favorite ways to trade.
Now he's saying that if he continues to develop his strategy and stay disciplined, that he might have even more success than he's already had. Given that he's made $550 on his first day's trading, that's a 55% increase on his $1,000, which is crazy. 55% in a day is madness. 55% over 3 months would be really good, never mind one day. So without having to know anything else about how he's trading, I know that it's over leveraged. Now he said that if he can maybe refine his strategy or get a better strategy and stay disciplined, that he'll have more success. It's difficult to know from looking at the trading that he does within the video whether he has a strategy at all, and if he does, how refined it is. It certainly looks to me like it's quite open to interpretation. It's quite discretionary as to when he enters and exits trades. And what I would say about the discipline, given that fact, is that if you don't have a trade that you know inside out, you know the rules, you know how to enter, you know how to exit, it's how can you be disciplined when you don't know those things? If everything that you do is discretionary, discipline is a difficult thing to measure because, as you've seen already, you'll measure it based on the result of the trade rather than actually your performance of implementing that strategy. So I get where he's coming from, but I think given his lack of a strategy or given his lack of a refined strategy, discipline may be a hard thing for him to measure.
Now, the trades I made today were just manually entered and exited. And so tonight I'm going to try to set up brackets so that I can systematically take profits and have my stop losses set before I enter a trade. Overall, it was a great first day of trading futures. I can't complain with a 55% return on my money. So I'm looking forward to trying again tomorrow.
So before we move on to day two, like I say, he does this over a couple of weeks. Make a prediction now. If you haven't already watched the video through already, make a prediction. What do you think the outcome of this trading experiment will be? Given what we know already. Maybe jot it down and see how close you were at the end of the video.
So today started off a little wonky because yet again my brackets weren't really set up right, so it took a little bit of time adjusting them to get them roughly where I wanted them. After a little morning sell-off, we had a nice uptrend on the NASDAQ.
So day two to sort of day six continues in the same vein as the first day. He does a lot of trading, he doesn't allude too much to the strategy that he uses, and essentially he takes his account, I think it's up just over $1,500 after the first day. Obviously he starts at $1,000. And by the end of day six, he's up to $3,090. So that's an incredible return on his trading over the first 6 days of his trading. And to be honest, if it's over 200% increase. So, most traders, if they did that in a year, would be absolutely thrilled. And I think a caveat that a lot of people would throw at this is, but yeah, he's only trading with $1,000. And okay. But the amount of money that you're trading with shouldn't really have an effect too much on the returns that you're looking for. yes, I understand that if you've got a smaller pot of money, you might be more risk on and look for bigger trades, riskier trades, until you've got up to that bigger pot of money, where then you'll start to look, take the risk off a little bit and look for lower return trades, lower risk trades. That I completely understand and, advocate myself, but up to this point, the only thing we've seen is a little bit of recklessness, in my opinion. But we'll jump to day 7 to see how he's getting on.
On Tuesday, I suffered some pretty big losses, and it put me in the hole $380 for the day. But I was able to chip my way back, eventually netting about $642 in profit within a little over an hour of the New York session open. Now here's where I should have called it a day and gone back to bed.
So on day 7, he starts by initially going down $380, which is an over 10% drawdown. And then, after that, he then manages to claw the account back up to $642 up for the day. So he's gone from 10% down to 20%, over 20% up on his account in little over an hour of trading the futures markets, which is crazy. That is over a 30% swing in his account from the low to the high in little over an hour. This just tells you how over leveraged he's trading, because the swings like that you shouldn't see on a daily basis or even a weekly basis. A monthly basis, I would argue. Never mind within an hour or a little over an hour. But he continues trading late that day.
But I didn't. I thought I would try to lock in some points right before market close, where there is usually a lot of volume. Unfortunately, things didn't go as planned, and I gave back all of my profit and then some. I ended up finishing the day in the hole $356 and feeling like a total idiot.
So then he goes from $642 up to finish the day at minus $356. So again, he basically just swings right back down. So in the space of one day, his account has traveled 60%. So he starts at 0%, the account drops to minus 10%. He then moves up to over 20% up, and then finishes the day over 10% down in the red. Leverage like this will ultimately kill you. He needs to really, really reel in the risk on these trades.
If I thought Tuesday went poorly, Wednesday went even worse. I was in the hole all day with practically every trade going against me. My losing trades were massive losers, and my profitable trades were small potatoes. I ended up losing over $2,000 on Wednesday, which was a huge blow to my account and also my confidence. As pissed as I was, and honestly still am, to lose that much money, especially after a week of good trading, I do think it was honestly for the best for that to happen in this video, because I think that is the most realistic outcome people can expect when doing these quick scalps on the NASDAQ without much experience.
So day 8, he loses nearly $2,000. His trading previous to this point would allude to the fact that this was likely to happen. He would only have not had to have a couple of those winners in previous days for this to have happened. And I would argue that this was always an inevitable outcome. And he mentions, actually interestingly, that the trades he takes he has large losses and small winners, which again suggests that his strategy is not well refined at all, even if there is one. A risk to reward ratio is a big part of a strategy, and whilst it might not always be the same on every trade, you should have a good idea of what you're looking to risk and looking to make on each trade before you take it. Just opening trades and seeing if they run into profit or if they run into loss and reacting at that point, you're just not going to do it. Human psychology is not set up, our default psychology is not set up in a way that we will perform well in those circumstances. Trading is a really weird thing. It's very different to anything that we've done or most things you'll ever done in life prior to this point. Losing is absolutely part of it, and the successful traders can manage those losses in a way that do not destroy their account. And for me, that's one of the big differences between people who are successful at this long term and people who aren't. And one thing that he mentions towards the end of this section is that he is annoyed that after a good week of trading, that he's lost that much money. And I would respectfully disagree with that comment. I didn't see a good week of trading. I saw a week of absolutely crazy trading. There were very few aspects, if any, that I could point to and say, you did this quite well, or could continue with this in the future. There were so many aspects of the way he approached the markets that I just would wholeheartedly recommend you avoid. And so to think that he thinks that that was a good trading week tells me that he only thinks it's good because of the result, because he made money. When in actual fact, if you'd replayed that week time and time and time again, trade like that, week on week on week, would you still think the trading was good if it had lost money? Because your trading can still be good and not make you money. That's the key thing. If you're implementing your strategy well, using discipline, making sure that you're making the right entries, the right exits, managing the trades well, as your strategy tells you to, that's been tested and refined over time, then that is good trading. Taking a trade with very little planning or reason for entry and it making a small profit and deeming it a good trade is not correct in my eyes.
The NASDAQ moves fast and is pretty volatile compared to the S&P. I don't want you to think that you can just do what I did and make a couple $1,000s that easily because, well, you can see what happened.
I declare bank.
This showcased my lack of discipline and a solid strategy, which is an easy way to lose a lot of money.
He even alludes to it himself at the end of the video, lack of discipline and a lack of a solid strategy. But as I said earlier in the video, if you don't have a strategy, can you even have discipline? Because what is it enforcing that you do? If you don't have the rules in place that you need to abide by, what good is discipline? You can't have it in my eyes.
Well, I wish I could tell you that Thursday was when I got things back on track and really turned things around for this challenge, but that's not the case. I dug myself further in the hole by losing $392. It just felt like every single trade went the opposite direction, so if you inversed all of my plays, you probably would have made a decent amount of money. My account is now at $381.70.
And the bleeding continues. Day 9. He might think it's a confidence thing. I'm not sure. He's not given too much insight into why he thinks the drawdown continued over this day. But down another nearly $400 on what must have been a $1,000 account at this point. That's a 40% drawdown, there or thereabouts. Again, massively over leveraged.
So I'm very close to blowing this account for the entire challenge. The market is closed for the rest of the week due to New Year's, so I'm going to take a much needed break from losing money, and I'll come back next week and we'll see what happens. Unfortunately, the bleeding continued Sunday afternoon. I couldn't recover Monday either, so now my account is below $50, which is the minimum you need to trade a micro contract. So this challenge has been a spectacular failure.
So did you predict correctly? Did you think that he would blow the entire account? I'm sure that many of you thought he would. The way he was trading, even after that first day, was fairly reckless and over leveraged. That usually leads to the account's demise and destruction, which has happened here. And like I said, this is not me trying to attack Daniel or dump on him in any way. I thought the video was brilliant, and he caveats it right at the start by saying that a few decisions that he makes in regards to this experiment are for the purposes of making this an entertaining YouTube video, which it was. He's not saying that this is how you should trade or anything like that. But the video resonated with me, like I said, because I'm sure it applies to so many newcomers that take up trading for the first time. A lot of the skills that you need to trade well, you don't necessarily possess straight away. So many things that we do in life outside of trading, that when you take up a new task, you sort of apply those same principles, work really well. You need to be right as often as you can be. being wrong really does have a lot of negative connotations. And when you apply that in trading and have the same feelings you would have from a different task, it really does negatively affect you. Losing trades are really a part of trading, and you need to get comfortable with losing, and losing regularly, which is a weird thing for any human really to have to do. So I get that. And also, when you're trading with such a small amount of money, if you're making 2% on a trade, making $20 is not really very glamorous when you're looking at your Instagram feed and there's guys stood in front of Lamborghinis touting millions from trading futures, forex, gold, Bitcoin, whatever it may be. But the best thing to do is just ignore those people. They're probably not real traders anyway, and a 2% return on your money in 1 day, 1 week is brilliant. And don't think that it's not. Spend some time learning about other fund managers or successful traders of the past or even currently, and you'll see that returns of 55% in a day are nowhere near realistic or sustainable, which this video has quite well proved that it's not, which is why I wanted to talk through it.
But at least you know now what not to do. Here's the thing though, I actually really enjoyed trading futures, and so I think I'm going to continue to do so moving forward. But I'm going to try to develop a more reliable trading strategy. I think relying on strong supply and demand levels for my entries and exits, instead of doing these quick momentum scalps, will be more profitable in the long.
So he mentions that he needs to make some improvements to his strategy, and I would definitely agree with him in this respect. A concern that I have is that he has just taken some random observations that he's had whilst doing the trading over this couple of weeks and will just implement them straight away. And that's not really how you get to the point of having a refined strategy. You need to test your strategies. You need to understand when they work and when they don't, and there'll be lots of nuances to any strategy when you start trading it. And if you just go straight into the markets, you'll quickly find that you'll be in a situation like, oh, I don't actually know what to do now, because you've not tested it. And I'm sure he ran into that loads of times throughout the 2 weeks, and probably subsequently after this video. But testing a strategy will really help you with that.
Also, I don't think I should have jumped into those E-mini contracts so quickly with such a small account, especially the NASDAQ, which moves very fast. I'd like to build my account up to like $10,000 before trading those minis, and instead stick with the micros, so that way my account has a little bit of breathing room.
Perfect advice. He realized at the end of this experience that he was probably over leveraged and trading the wrong contract types, which he was. He said he's going to stick with the micro contracts next time and build his account up to $10,000 before moving up to the minis. And when we looked at when he was trading the micro contracts, his profits were $2 and $12 on a $1,000 account, which again seems about right. If his losses are somewhere in that ballpark too, he's risking 1 and 2% on a trade to make 2, maybe 3, maybe 4%. Brilliant. That's around about the right risk parameters to be taking and to be sustainable. And then he said when he's up to $10,000, he'd move up to the minis. And we could see that like a typical winning trade was about $120, $150 on that, which again would be sort of 1.2, 1.5% profit on that trade, which again seems reasonable.
So while I am personally disappointed that I lost money, I am glad that you got to see me fail, because I don't want you to have unrealistic expectations going into any type of trading, but especially futures. The way I was trading, it was going to be a get rich or get wrecked, and obviously I got wrecked.
It's true, but I would personally argue that he was always going to get wrecked trading like that. It didn't really matter what figure was the high point. Obviously the high point of his trading account was about $3,000, I think, maybe just a little bit above that. But he could have got to $20,000, trading like that. He would have still blown it up at some point, 100%. If you spend some time looking at sort of statistics and how these things play out, it was just a matter of time before that account was blown up.
I also decided to take my own advice and do some trading on a demo account. So with just a few simple trades, I netted $468 on my $1,000 demo account.
So this is the last bit, and it causes me a little bit of sadness really, because he moves over to a demo account of $1,000 and he says within a few simple trades, the account has made $468, which if he's made $468 on a $1,000 account in a few trades tells me that he's still over leveraged. And then he says at the end of the video on the screen that the account is now at over $2,700. So I don't know what time period that's over, but if it's over a similar time period to the previous experience that he's shown us within this video, he's still over leveraged, which again tells me that he will probably end up blowing this account as well. But that pretty much covers Daniel's experience. It's a brilliant video, and if by any chance Daniel is watching, again, I meant no offense through the comments that I've made on it. I just think it's a fantastic learning experience for new traders, and I really do hope it's been helpful. If you have enjoyed this type of video, please let me know in the comments. I'll happily do this again should I come across any other videos that sort of fit this same sort of theme. And if you've got any observations or questions on the things that we've looked at in this video, by all means, drop me a comment below. I'm always down there having discussions with anybody that's around at the time. So like I say, I hope you've enjoyed the video, and I'll see you next time.